traction solves all problems, right? If you can just focus on your business, focus on building a great product that people love, I think you're going to be fine. It's the founders that don't have a great product yet that are trying to raise money, they end up just wasting a lot of people's time, including their own, because they're just not ready to raise capital yet. I can't tell you how many founders I meet, they have absolutely no revenue, no traction, and they think they should have some $50 million valuation or $100 million valuation. And it's like, how do you get to that number? It just doesn't make any sense. And they go, oh, so and so, raised at this valuation and they have a similar company to ours.
Hey guys, and welcome to the Grow IT podcast. Your host here, Alessandro Cutri, joined today by none other than Ryan Baird. I got it, right? We'll be diving into my Ryan's story, a little bit about his background, what they're currently building with Baird Augustine, and some different insights into the industry. He's got his hands across multiple different projects, so he's got a lot of insights. So today's going to be an interesting episode. Make sure to stick around. Without further ado, I'll kind of just pass it over to you, Ryan, if you don't mind just introducing yourself and telling the audience a little bit about your background and I guess how you got to where you are today.
Sure. So I'm actually third generation Silicon Valley. My grandfather worked for Lockheed before Martin, and both my parents worked for Hewlett Packard. I started my career off right here on Sand Hill Road at Morgan Stanley. We were dealing with their top clients with $50 million of investable assets or greater, and pretty much spent my career in this institutional investing space. I went and traded for Maverick, which is a hedge fund based in Chicago, became the number one trader here in their San Francisco office, started going to Chicago once a quarter, training their traders on what I was doing. And then in 2010, launched my own fund, Flotilla Partners. We were also arbitraging volatility. Um, After the great financial crisis, all the volatility pretty much went away.
Mm-hmm.
And a lot of options trading went from trading nickels to pennies. So the arbitrage was pretty much gone by the time we left. After that, I spent some time in the startup world doing corporate development, figuring out which companies we can merge with or acquire, doing a lot of buy versus build analysis.
Yeah.
And then I spent a number of years doing global venture. I was working for the GWC Innovator Fund, which was a Beijing-based venture firm. And we would go to 9 countries every single year, talk to the top VCs, talk to the top family offices, figure out what was in their portfolio. We would have a startup competition in each location,
Mm-hmm.
and we would have the top VCs kind of telling us who we should invest in. We would invest in up to 3 companies in each country, and then we would bring the number one startup from each country back to Silicon Valley at the end of the year, do a global championship. We would have
Oh.
all Midas list winning VCs judging it, and depending on which startup those VCs selected, we would reinvest into that company. This program was very successful, helped launch Didi, which is the Uber of China. And through that fund, we invested in Xiaopeng Motors, which went public for 11 billion on the Nasdaq.
Hmm.
After that, I ran my own startup called Leica. We raised over $35 million for it. It is a social network that helps people monetize their data. And I've had a little bit of hiccups here and there, but hopefully we will see that launched one day. Most
Hmm.
recently, though, I'm really focused on running Baird Augustine, our investment bank. We were recently awarded an award from the state of California for our investment banking decorum and some of the innovative stuff that we're doing on the private placement side of the world. And then I'm also a GP in our hedge fund, Asymmetrical Alpha. It's one of the top performing funds in the world. And lastly, I run our institutional investing group called Focus on Risk. You can find us on all social media platforms, Facebook, X, LinkedIn, YouTube. And it's really a group that's focused on long-term investing. We all understand that you cannot control your profits, and that is why the group's called Focus on Risk, because your risk is something that you actually can control when it comes to investing. And
Hmm.
with the success of that group, we've done events in 19 countries all over the world. And now we're really focusing here on California. And The formula is pretty simple. We get an institutional investor that has, call it 100 billion under management. This last event, we had Fiona Ma, who's California State Treasurer. She oversees our state fund with 150 billion under management. She's also on the board of CalPERS. Very, very influential woman in investing and just in banking globally, now that California is the fourth largest economy in the world. In addition to an institutional investor, we try to get someone from the Mag Sevens investment team. So think M&A, Corp Dev, or venture. This last event, we had Alan Wu from NVIDIA. He gave an hour-long off the record talk about where NVIDIA is investing in AI over the next few years. We
Hmm.
also have elected officials. This last event had the mayor of Fremont, mayor of Santa Clara, mayor of San Jose, vice mayor of Sunnyvale, city council member Min Tanaka from Palo Alto. And then we always get a CEO that's taken a company public. This last event, we had Dan Springer, who took DocuSign public. And then we feature a number of founders that have either already had a $100 million exit or they're currently raising $100 million plus. We'll also feature GPs. And, something that's really unique about our event is we not only hear from the founder, but we also hear from the investor. So I think a typical event you might go to anywhere around the world, you'll see a startup pitch, you'll hear from the founder, and maybe a group of judges will judge them and kind of give them some feedback. At our event, we make sure that the founder has already raised some capital and we do want to hear the opportunity from the founder, but more importantly, we want to hear from the investor. Why now? Why this team? Why is this startup a top idea to invest in when you have all these publicly traded options? You have all these other startups, you got commercial real estate, you have all these different options to put your money into. Why this
Hmm.
company? And I found that you can get a lot quicker through due diligence if you have these high level conversations, you talk about risk, and you talk about how to mitigate that risk.
Yeah, man. It sounds, I mean, obviously it sounds like you have your hands full on a couple of different things, right? You definitely are into a lot of things. So I'm sure you see so much across the board. And so I'm curious to ask you, like, what are some of the trends that you're noticing from having these conversations, putting on these events, that you're noticing right now within the market?
Yeah, there's a few really big trends happening right now. AI agents is definitely one of the bigger ones. We're going to see millions of AI agents in the not so distant future, and the AI agents are going to be talking to other agents on your behalf. We're seeing a ton of startups in this space, and I expect that trend to continue. I
Yeah.
think one of the bigger trends that people are not talking about is the Bitcoin treasury strategy,
Hmm.
something that was introduced by MicroStrategy, which is now known as Strategy. And Michael Saylor is the one who really started this off. And his whole thesis is that Bitcoin is better than cash, especially if you're holding it over a 5 year period.
Hmm.
And the reason why this is so important is previously, if you are a bond manager and you wanted exposure to Bitcoin, you couldn't get that exposure because if you're a bond manager, you can't invest in Bitcoin. If you're a bond
Yeah.
manager, you can't even invest in a company like MicroStrategy that just buys Bitcoin. But as a bond manager, you can invest in their bonds. And what
Hmm.
MicroStrategy did was he gave the market a convertible bond at a 0% coupon, and he's raised over $20 billion so far. He's going to raise up to 42 billion with this current round, and then
Hmm.
probably do an 80 billion or $100 billion round.
Wow.
And the reason why he's able to do this is that he's selling volatility to Wall Street. Your traditional bond doesn't really move that much. The MicroStrategy bonds last year were up over 100%.
Hmm.
The bond managers that performed the best last year all had exposure to MicroStrategy. The bond managers that didn't do well last year all did not have exposure to MicroStrategy.
Wow.
So it is a big deal that Michael Saylor is able to sell volatility to the bond market because he sells that volatility to them and then he goes around and just goes and buys Bitcoin. We've also seen him issue a preferred stock called Strike. And again, this is really important because it opens up this whole new pool of capital that currently is only investing in preferred stock, right? They couldn't invest in Bitcoin. They couldn't invest in MicroStrategy common shares. They couldn't invest in the MicroStrategy convertible bond, but they can invest in the preferred stock. And that just gives Michael Saylor even more capital to, again, go buy Bitcoin with the money that he raises. And
Mm,
some people might say, okay, well, you're just moving money from this point to another point, so you're not really making any money. And that's not true. The reason why it's not true is that when he sells stock, he's selling it at a premium to his net asset value. When he sells convertible bonds, he's selling the strike price above the current price. So he's always making a premium whenever he's selling some of these securities, and it becomes accretive to
interesting.
the shareholders. And previously, there was an accounting rule called FASB that prevented people from marking their Bitcoin assets to the Bitcoin price. Now that FASB is passing, they're going to be able to actually mark Bitcoin to the market. And once that happens, we'll see how profitable strategy has been by doing this Bitcoin strategy, Bitcoin treasury strategy.
Yeah, it's so fascinating, right? And I think Michael Saylor is one of those, first movers that's just taken advantage of, really just he's put such a big bet on Bitcoin for been one of the big movers since, early 2020, right? He's been in the game. He's one of the moguls, I will say, in the Bitcoin space. And so it's interesting to
Yeah.
see, and you breaking down his strategy. I never knew exactly what exactly he was doing in that sense. And so it's definitely fascinating to hear what that actually entails and what that actually looks like. And, it'd be interesting to see how he continues. I mean, they've MicroStrategy and strategy. Have they now turned the name into strategy just itself? Is that the rebrand?
Yeah, that's the rebrand. It feels
Yeah.
like this is going to be a transitional rebrand.
Yeah.
So before they were called MicroStrategy, now they're called Strategy, and then they have the Bitcoin B logo, right?
Yeah.
Like Strategy B. And I feel like in a year or two, they're going to just be Strategy Bank with the Bitcoin as the B. And
Interesting.
and because they'll own the most amount of Bitcoin compared to any other corporation, they're going to be able to monetize Bitcoin as a commodity in a number of different ways, whether it's
Yeah.
staking, lending, um, and there's a lot of things that we haven't even thought of yet
Yeah. Yeah. Yeah.
coming out. So it's really, really interesting. I really do think it's one of these companies that people ought to know about. They're clearly the market leader in that.
Yeah.
If you believe Bitcoin's going to zero, this is an awful name for you. You should actually
Yeah.
short this name. Awful
Yeah.
name to go long, but great name to go short if you believe that Bitcoin is going to zero.
Yeah. Yeah.
Or even if you believe that the Bitcoin cycle is on a downtrend, this is a great name for people to short. Um, Personally, I think Bitcoin is seeing mass adoption and going mainstream. I think there's
Yeah.
30 states now that are looking to have a Bitcoin reserve. We're seeing lots of countries, sovereign wealth funds start to buy Bitcoin. We've heard from this administration that they are extremely bullish on the blockchain space and they really want it all to happen here in the
Yeah.
United States. Um, so really interesting name. And I think it's one of these names that people should recognize because this is a big financial innovation that's happening, right?
Yeah.
Guys,
Yeah, yeah, definitely. I'm a big Bitcoin bull over here as well. So we're definitely probably similar in the mindset. I've been following Michael Saylor and what he's been doing for quite a while now, and it's really some revolutionary stuff, right? He's leading a movement in what he's doing, right? And to see what he continues to do is going to be very interesting. But yeah, I totally agree with you. I think it's for people who are Bitcoin bears, right? They think that hey, they want to short the stock. All power to you. But as to your point, we're seeing more of that mass adoption. We're seeing the administration be very friendly towards Bitcoin, and it's one of those assets that you can invest into that there's really I think it's a superior gold, right? That's one thing that I always say. I think Bitcoin is one of those things that I don't ever see not being adopted as far as just inflation that's coming into the economy. What we're seeing across the board with the U.S. dollar being, printed at trillions and trillions of rates, it's only bound to boost up the prices of other assets, right? Be it gold or other, commodities of that sort. So Bitcoin is positioning in itself to be that leader in that space as well. So we'll see. It's one of those things that we'll continue to see how it unfolds and what happens from that as well. But I did want to transition a little bit, Ryan, and ask you just a little bit about, the types of investments that you're making, right? Obviously, you're, with Augustine and kind of what you guys are building over there. What are the types of companies that you guys like to invest into, and kind of that that value proposition that you guys bring to the table?
Yeah, so with Baird Augustine, we're not actually investing. We're helping connect either GPs or founders to family offices or
Yes,
institutions.
yes.
Um, but when we do see a private company that is extraordinarily compelling, we probably would make a private investment. But the vast majority of our investing is happening through our hedge fund, Asymmetrical Alpha. And with the investment bank, we're again mostly helping family offices find above average deal flow.
Yeah. Yeah. And so, in how would you say that you guys really stand out within the market in terms of what you guys are offering, and where would you say that unique value is that obviously comes with working with you guys?
Yeah, I think a lot of investment banks, they help people raise capital, and I think that's fine. From my experience, I don't think that raising capital happens in a vacuum. I really think it's more of a corporate development function than
Yeah.
just raising capital. If you have an average deal and you go out to the market, you're not going to get any investors. So
Hmm.
really try to work on the corporate development side of things, make sure that the company is above average, make sure they have the right advisors, board members, make sure that they're getting earned media, making sure that they get the right hires if they have that problem. So it's much more for us about helping to develop the corporation, and fundraising is a big part of that. Investor relations is a big part of that. But we really try to make sure everything's above average and we're helping with the corporate development and not just the fundraising. I think that's the big difference. I,
Yeah.
I think another difference is there's a lot of investment banks that'll work on smaller deals, call it $1 to $5 million. You know,
Hmm.
we're really focused on $25 million, $100 million plus type of fundraising. Um,
Yeah.
the investors that we speak with, they're writing $5, $10 million checks. So, startups or funds that are raising, less than $20 million doesn't really make sense for us to focus on.
Yeah, yeah. So definitely, and I love the way that you've explained that actually. And so when it comes to like building, because we talk about that a lot over here on the Grow IT podcast, just about building relationships, right, and being able to get into the right conversations, find the right deals. How important is, and obviously like we're seeing AI and a lot of technology replace a lot of people, and just the movement that we're seeing. It's almost human interaction is becoming more and more valuable, right? In the space that you're in, how important would you say it is like to build those relationships, and how pivotal have relationships played in kind of helping you grow your company?
I mean, relationships is everything. I actually tell people that we started Baird Augustine because we wanted to build a relationship first based investment bank.
Yeah.
Before I started an investment bank, I had family offices that wanted to work with an investment bank. So I made the introductions to tier one firms, and they were treated very transactionally. And I
Mm.
was I was very surprised to hear that because when I was at Morgan Stanley, we treated all of our clients very relationship based,
Yeah.
right? It wasn't just how to hedge their portfolio. It was, if they needed Disney on ice tickets front row, we'll make that happen.
Yeah.
Um, and both my parents worked for Hewlett Packard. Jobs had an internship with Hewlett Packard. Wozniak worked for Hewlett Packard. HP set the standard of culture to be relationship first, but work very, very hard and achieve big things. All of Silicon Valley copied them.
Yeah.
And, that is how people achieve big things, is by having a super strong culture.
Yeah.
Happened to Apple, Google, Meta as these companies have gotten bigger, once they reach like 50,000 employees, 70,000 employees, you start to see the average tenure at the company decline, and the companies become a lot more transactional, right? People just want to get a job there so that they can boost up their resume so they can go start a startup, or they just want to get a job there so that they can get a high paying job somewhere else. Uh,
Yeah.
and I think all the Mag 7's average tenure now is below 2 years, except Nvidia and Tesla. So the combination of investment banks turning more transactional, these tech corporations turning more transactional. And then I think there's also been a few VCs that got lucky, investing in one company, and they go, oh, you just need to have the top of the funnel and only focus on your top of the funnel. And if they're not in your funnel, then they're dead to you. And I think a
Mm.
lot of people took this transactional advice, and we've seen a lot of this happen throughout the world. And I'm sure your inbox can show you all of this, where you're just getting constantly bombarded uh,
Yeah.
by spam, right?
Yeah. 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 Yeah.
To answer your question, relationships are extremely important, and
Yeah.
and now that things are becoming more and more digital, I think they become even more and more important. And
Yeah.
this is why I really believe in our community, because people get to come to a place where they can talk about risk, they can talk about pros and cons of things, and I think that's extremely valuable. And then adding on the in-person events on top of that just kind of brings everything together, and we help people achieve their business objectives.
Yeah, and I think you bring up a great point, and it's one of those things where they're the relationships should be the cornerstone of your business, right? Especially if you're in a business that's serving people, and most businesses are, right, in
Yeah.
that sense. And so when it comes to first time founders, because we get a lot of founders that are tune in and that maybe are looking to grow their company, and they're always looking for more advice in terms of how to go out and build those relationships, what they should do to grow their firm. What's some advice that you'd be able to give to that first time founder that's either trying to raise capital, that's either trying to just grow their business?
Yeah, I mean, traction solves all problems, right? If you can just focus on your business, focus on building a great product that people love, I think you're going to be fine. It's the founders that don't have a great product yet that are trying to raise money. They end up just wasting a lot of people's time, including their own,
Hmm.
right? Because they're just not ready to raise capital yet.
Yeah.
I can't tell you how many founders I meet. They have absolutely no revenue, no traction, um, and they think they should have some $50 million valuation or $100 million valuation. It's like, how do you get to that number?
Yeah.
It just doesn't make any sense. And they go, oh, so and so, raised at this valuation, and they have a similar company to ours. Well, that person raised when interest rates were completely different. So, another problem I have with a lot of founders is they don't understand how their valuation is tied to the risk-free rate, right?
Hmm.
A lot of founders, when interest rates move, they don't understand that their valuation had just moved. And even a lot of VCs don't really know this, to be honest with you, but people that are
Yeah.
paying attention to the whole risk curve, they start at the risk-free rate, and then they get riskier and riskier as you go out the curve. And when interest rates go up, then it's a lot less appealing to take venture risk, and it's a lot more appealing to take no risk and just buy treasury.
Yeah.
When interest rates go down, then it's a lot less appealing to buy treasuries, and it's a lot more appealing to buy things that are riskier. But it's extremely important for founders to understand this. As soon as interest rates go up, founders should be immediately thinking about extending runway, cutting costs, and really hunkering down. But
Yeah.
typically, what we see is they see a lot of people raising a lot of capital. And even though interest rates have changed, they don't really realize that the entire world has changed.
Yeah, that's a great point. And being conscious of that, right? Because I don't think a lot of founders are when they're thinking about, raising capital, they're not thinking about the interest rates. They're they're more focused on, just raising capital, right? In that itself. And so there's a lot of great points you bring up there. You've obviously like spent so much time in the market now, and you've seen like a lot of ebbs and flows. You've seen different trends come and go. I always love asking this question. If you had to like go back to your younger self, right? Like let's say you could rewind the clock back and you were able to give yourself some advice, like let's say 20, 30 years ago, what would you tell your younger self?
Yeah, I would tell my younger self to really focus on market leaders. Um, I think when you're younger, you want to try out all the riskiest strategies and learn more about them because you're trying to make as much money as possible. And I think, it took me quite a while to realize you got to focus on risk. And,
Yeah.
I knew about Buffett when I was younger, but he was old and boring, and I kind of just skipped over him. But as I've gotten older, I really do realize how right Buffett is on so many things. And, owning a business and not just owning a stock is a big part of that. Um, and, I think you don't need to be a value investor, but you should really be investing in what you understand. You only need 20 to 30 names, people that
Hmm.
have 50 plus names. You're not really getting more diversification at that point, and you're not reducing your risk, right? And that's the main thing. And if you have 50 names, but you love 30 of them more than the other 20, you should only own those 30. Because again, you're not reducing your risk by owning more names. If anything, you're just holding names that you have less conviction in, and you don't want to do that. I would tell people to really just focus on 20 to 30 names that they
Yeah.
think are going to dominate for the next few decades, right? You want to let these things compound. The reason why technical analysis doesn't work is you can have a name go from 10 to 30, right?
Yeah.
And a guy who's doing technical analysis, maybe he catches it from 11 to 12, and then he catches it from 20 to 22, and then he catches it from 27 to 30, right?
Yeah.
The guy who realized that this was the market leader caught the whole move from 10 to 30.
Yeah.
And they're not paying short-term capital gains tax, and they're not
Yeah.
getting stopped out of other trades, right? They're just letting the company build value over time. And if you don't speculate on random companies and you really focus on market leaders, right? These market leaders, they should do well no matter who's the president. They should do well no matter where interest rates are, right? This should be one of the names that bounces back after a recession the fastest because it's such a strong company.
Yeah.
And I feel very fortunate to be in Silicon Valley because we get to see these trends well before they manifest in the stock market. I mean, I've been following Bitcoin since 2009, and
Hmm.
a lot of that research I've done over the years led me to MicroStrategy, and it helped us be in front of this before anybody was really talking about it.
I
And
thought I got in early. I got in at 2016, apparently 2009. Yeah. But no,
um,
it's such great advice though, man. Right? Like I think oftentimes everyone's trying to chase the 100x, the 500x, right? And just try to chase that next, unicorn where chances are you're probably not going to find that, right? But like what is the most practical advice, like almost a sage advice, right? Like Warren Buffett, right? Is to invest in those market leaders that you know aren't going to go anywhere and stop trying to time the market, right? No, and nobody can really time the market. Really, the best times to always buy are going to be the where the fear index is the highest, right? And when things are going down, those are always the best times to buy and accumulate. And if as long as you have that long term mindset when it comes to investing, I think that's the biggest payoffs that you'll ever get, right?
yeah,
It's buy
I
in,
think
buy out.
yeah, I think the best time to invest is every first and 15th when you get a paycheck.
Yeah.
That's the time to put the money to work. And if you only have 20 names or so, it's pretty easy to put this money to work. And sometimes you'll be buying it higher, sometimes you'll be buying it lower. But when you look forward 10 years, you're going to
Yeah.
loving that you bought it all prior.
Yeah.
And, I would just have people focus more on risk management than anything else. Because, spoiler alert, nobody can tell the future. Nobody can predict the future. If
Yeah.
if technical analysis worked, we would see people richer than Warren Buffett that were just using technical analysis. It
Yeah.
existed back then, believe it or not. It wasn't something that we needed computers in order to use. So I think it's abundantly clear that technical analysis does not work to predict the future. Can it tell you where the stock is on the chart? Sure. Can it show you different patterns? Sure. Will those patterns play out? You have no idea.
Yeah.
And neither
Yeah.
does anybody else.
Yeah. 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 No, it's
And
100%, man. Yeah.
and you have to take taxes into account when you're investing. A lot of people
Definitely, because
do not do that.
the short term, like you said, the short term capital gains tax that you have to pay on, even if you do pull out, like, and say you save, 5%, the amount that you're gonna have to pay in taxes, it wasn't really worth having to buy in and buy back. And then you have to have the stress of being able to buy back in at the right time, right? There's so many things that, early on, in terms of, I feel like everyone's investment career, they think that technical analysis works, and maybe they study the charts, they figure out the different patterns that there is. But then as you start to, I think, gain more and more experience, you start to realize that, wait a second, like, if these patterns broke out how everyone expected, everyone would be able to make money, right? And in that sense, I don't think they do a good job of really predicting long-term trends, right? That's never going to really, it's just not going to happen that way, right? Maybe short-term stuff, they can, certain patterns can erupt that you can say, okay, within a day, or 30 days. But fundamental analysis, I think, is more important, right? Just the actual market analysis, understanding where things are going, where we're moving towards as a society, and placing bets on that, right? When it comes to, like, my biggest bet is going to be Bitcoin, right? It's because I see where we're going towards as a society, and it just makes the most sense, right? That and AI, those are bets that are going to pay off, because that's where we're going. That's where we're in the, and obviously we could be wrong, right? There's always room for that. You never know, right? No one can tell the future. But
Mhm.
if you have to place a bet on that, that's the bet that I'm willing to make. You know.
Yeah, it all goes back to our community. Focus on risk, you
Yeah.
know? It's really this understanding that you can't control your profit. If
Yeah.
if anyone can control their profit, they'd be a trillionaire,
Yeah.
right?
Yeah.
So, and it's really hard for people to come over this idea of I'm going to invest in this and I don't know what the outcome is going to be, right? They
Yeah.
want to invest in something where they know they're going to make money. And the world just doesn't work like that. And I think
Yeah.
another really, really big mistake that people make is they read media to invest.
Yeah.
It
Yeah.
is the worst thing you could do. If
Yeah.
media had any idea on how to invest, they wouldn't be in the media.
Yeah.
So, there's a lot of things that people need to kind of overcome. And I think when you're younger, it's hard to really internalize it until you've
Yeah.
seen market swings and you've done the math. And,
Exactly.
I feel like I had to learn everything about technical analysis in order to understand why where it falls short.
Yeah.
And same thing with fundamental analysis.
Yeah.
People fall into kind of these religions, these financial
Yeah.
religions, and they just go, no, this is what it has to be. This is what it has to be. And we know by studying these people that if you just buy cheap stocks, you're probably buying stocks that aren't growing and aren't going anywhere. And
Yeah.
if you buy expensive stocks, you're probably too late. I mean, there's all kinds of things that happen. Um, but it is heartbreaking to me to see people, go on Wall Street bets or, one of these more gambling focused
Yeah.
trader groups, and you hear what happens to people's lives when they believe
Yeah.
they can tell the future and they, lose a $500,000 or they lose $10 million,
Yeah.
right? And a lot of that comes because they're taking leverage, right? And they want to maximize the most amount of money that they can make. And
Yeah.
that's not the way to look at it. I think a lot of people would do much, much, much better if they again focused on their risk and instead of taking huge risk to make a bunch of money, I think they should just take a little bit of risk to make consistent, repeatable money.
Yeah, I think that's a perfect like that's a perfect note to end on, right? On that itself, right? For people listening out there when it comes to investing, I think that's one of the things that you have to learn almost the hard way in some cases, right? As you continue to invest and learn different things, but knowing your risk, right? And knowing that it's not about 100x, right? Sometimes it's just about getting singles and doubles and just stacking up the singles, right? And that's the most important part. That's what keeps you in the game, right? And that's what long term is going to continue to build your portfolio. So I love that you bring that up, man. I think you have a lot of interesting insights. And if people are listening to this, they're like, "Hey, how do I reach out to you, Ryan? Like, what are the best ways to go and contact you? What are the best ways to get in touch with you?"
Yeah, so our website, bairdAugustine.com, you could always find us there. And then our investing group is just focus on risk. We're on Twitter, Facebook, LinkedIn, um, and I got personal social media as well. But that's where we're mostly engaging with accredited investors.
Perfect. Well, I'll make sure to include that in the description for people to go check out, man. It's been a pleasure having you on the show and getting the chance to hear a little bit more about what you guys are doing, your take on some of the market. If you guys are listening to this, make sure to like, comment, and subscribe for more content and go check out Ryan and the team and see what they're doing over there and get in contact with him. Thanks again, Ryan. It's been an absolute pleasure, my friend.
Thank you. Pleasure's all mine.